When we think about income, our minds usually jump straight to that monthly payslip, right? But what about the money you're making from investments or that side hustle or even from renting out a spare room? Well, that's all income too. And yeah, the tax authorities are definitely interested in it. So let's get into how to handle all of that the right way. Just take a second and think about it. Did you get a dividend check last year? Or maybe earn some interest in a savings account? All of that is potentially taxable income. So the big question is, are you handling it correctly? Are you maybe leaving some money on the table? Or worse, risking a penalty down the line? So here's what we're going to do. We're going to break down the four most common types of income you might have beyond your regular salary. By the end of this, you are going to know exactly how dividends, interest, rent, and royalties are taxed here in Malaysia.
First up, let's talk about dividends. Now, if you own any stocks or even certain unit trusts, you'll want to pay close attention to this, because the rules here might just be a whole lot simpler and, honestly, more profitable than you think.
Okay, so what exactly is a dividend? Well, it's pretty simple. When a company you've invested in makes a profit, they might decide to share a piece of that pie with their shareholders. That payment you get, that's a dividend. And it could be cold, hard cash, or sometimes other assets. And now for the best part. This is the key takeaway for anyone investing in Malaysia. Thanks to what's called a single-tier tax system, the dividends you get from local companies are completely tax-exempt. Yep, you heard that right. That money is all yours to keep, and you don't even have to declare it on your tax return. It's a huge perk for investing locally. And this exemption is actually broader than you might realize. It doesn't just cover stocks. We're talking about dividends from co-ops, those really popular unit trusts like ASB, and even some foreign dividends fall under this rule. For most of us, the bottom line is beautifully simple. Your dividend income is tax-free. All right, let's switch gears and talk about interest income. Now, the rules here are a little different. It really all comes down to one key number and, you guessed it, a few really important exceptions. And that key number is 5%. Generally speaking, when a bank in Malaysia pays you interest, say from a fixed deposit, they will automatically withhold 5% of it for tax. This is what's known as a final tax. Let me break that down. Imagine your fixed deposit earns you 1,000 ringgit in interest. The bank takes its 50 ringgit cut for taxes, and you get 950. That's it. Story's over. You don't have to declare that income again on your tax return because the tax part is already settled. But wait a minute, does this 5% rule apply to every single type of interest you could possibly earn? No, not at all. And this is where knowing the rules can really pay off. There's some really important exceptions you should know about. For example, any interest from government bonds? Tax exempt. That bonus you get from Dabung Haji? Also exempt. Even the interest from certain savings accounts is totally tax-free. It really pays to know if your interest income falls into one of these buckets. All right, let's move on to our third topic, rental income. If you're a landlord or thinking of becoming one, this section is basically your practical guide to getting the tax part right. The key to everything here is knowing which of your expenses you can actually deduct. As a general rule, you can deduct all the ongoing costs you need to keep the property rentable, things like repairs, insurance, and the interest on your loan. But, and this is important, you can't deduct those one-off costs to get your very first tenant, like the initial advertising or agent fees. Now, here's a question that probably keeps some landlords up at night. What happens during those dreaded vacant months between tenants? You're still paying all these bills for the property, but there's no rent coming in. Well, I've got some good news. Those ongoing expenses, like your property tax and the loan interest, are still deductible even when the property is temporarily empty. That's a crucial rule that can give you some much-needed relief during those lean months. And finally, let's talk about royalties. This one's for all the creators out there, the artists, the writers, the musicians, the inventors. It turns out the tax system has some really special advantages built in just for you. The tax system offers some pretty generous exemptions for creative work. If you're an author or a painter, the first 20,000 ringgit you earn in royalties is tax-free. It's the same deal for musical compositions. Translators get a 12,000 ringgit exemption, and some cultural performances are even fully exempt. It's a fantastic incentive for our creative industry. Okay, let's do a super quick recap. For dividends, the magic word is tax-exempt. For interest, think 5% final tax, but always check for those key exceptions. If you're a landlord, remember to deduct your ongoing expenses. And for all you creatives, take advantage of those generous royalty exemptions. So there you have it. We've covered the basics for 4 major income streams that go beyond your salary. And look, knowing these rules is really the first step to managing your finances more effectively. So the real question is, with this knowledge in your back pocket, what part of your financial journey are you going to explore next? Thanks for tuning in.